Okay, let's unpack this. Today, we are diving deep into something that, well, it continues to redefine our understanding of finance and technology too. Building and maintaining your own personal cryptocurrency investment strategy. For many, I think the crypto landscape can still feel like, navigating uncharted waters. A bit of a maze, right? Unfamiliar terms, really rapid shifts, seemingly endless choices. So our mission in this deep dive is to try and cut through that complexity, providing you with a clear, actionable roadmap. We'll cover everything from developing a robust strategy one tailored specifically for you to identifying the essential tools you'll need and maybe most critically, implementing some ironclad security measures.
Yeah, it's truly fascinating when you think about it. Mastering these digital assets isn't just about, the speculative games, although obviously that's a big draw for a lot of people. It's more fundamentally about understanding this whole new paradigm of digital ownership and management. And this deep dive, I think it's important to stress, isn't really about giving you a hot tip on which coin is going to, like, moon next week. Instead, we're really focusing on establishing a resilient, responsible framework for how you engage in this space. Everything we're discussing today is really tailored for you, the listener. It's designed to empower you with a kind of foundational understanding that hopefully transcends those fleeting market trends. We've meticulously synthesized insights from a pretty comprehensive study guide, some detailed briefings, and practical visual aids too, all designed to give you a really holistic and, importantly, actionable understanding.
Okay, so here's where it gets really interesting, I think. Because the absolute crucial first step in your crypto journey, it isn't about picking a coin or, even opening an exchange account. It's really about some profound self-reflection. We truly need to start with you. So the question we're posing directly to you, our listener, is this. Why are you investing in crypto? It might seem like a really obvious question, but your answer. It's going to profoundly influence pretty much every decision you make after this. Are you looking for those maybe exhilarating short-term gains? Are you aiming to actively trade, capitalize on rapid price movements, perhaps even make it a big part of your daily focus?
Or is it the long game?
Exactly. Or are you playing the long game? Are you embracing that huddle philosophy, aiming for substantial wealth growth over many years, maybe even a decade or more? And are you willing to ride out some pretty significant volatility to get there? And then there's the equally valid practical side too. Are you primarily interested in crypto for its daily utility? Engaging with decentralized applications, dApps, or using various blockchain services for what they can do beyond just pure investment.
And that leads right into the next critical piece, doesn't it?
Yeah.
The risk tolerance.
Yes, absolutely. Beyond your main motivation, there's this critical, often kind of understated aspect of your risk tolerance. What does it genuinely mean to be comfortable with risk in a market as, well, notoriously volatile as crypto? It means doing an honest, maybe even a brutally frank assessment of how much potential loss you can actually absorb. And this isn't just about the financial capacity, like the amount of money you can afford to lose, right? It's also, maybe even more importantly, about your emotional capacity. Can you truly stomach a 30%, 50%, maybe even an 80% drop in your portfolio value without it causing undue stress or panic selling or, impacting your overall well-being?
That's a tough question for many people to answer, honestly.
It really is. And our comprehensive study guide, drawing from the sources we looked at, strongly advises you to write your answers down and keep them handy. And there's a really profound reason why this seemingly simple act is so vital. It anchors your decisions in rationality. This written plan becomes your sort of unwavering North Star, especially when the market is doing its unpredictable, often irrational dance. It's your shield against those impulsive actions driven by the powerful forces of, let's face it, fear and greed. It helps you avoid buying into hype at market peaks or, conversely, panic selling during those deep corrections. Ultimately, your crypto plan isn't some generic template you just download off the internet. It's got to be a bespoke, living document that aligns intimately with your unique financial situation, your broader life goals, and, crucially, your personal comfort levels. It really should fit your lifestyle and your values, not dictate them.
Which I think naturally prompts us to ask, okay, how do these deeply personal goals then translate into a concrete investment strategy? It's quite compelling to see how your initial why really provides the blueprint for your how.
So let's maybe dissect the distinct investment styles that were meticulously outlined in our source materials. Each one comes with its own characteristics, its own demands, and often, a unique set of psychological challenges too. First, you've got the hands-on trader. This individual, they're characterized by deep, almost you could say obsessive engagement. They're actively monitoring market charts daily, sometimes hourly, making frequent buys and sales to try and capitalize on those short-term price swings. Their success really hinges on a sharp understanding of technical analysis, market sentiment, maybe macroeconomic indicators. It often requires significant screen time and really rapid decision making.
A huge commitment, then. Absolutely. The commitment here is substantial. For many, it's basically like a full-time job. It demands both intellectual rigor and, frankly, emotional resilience to navigate those rapid gains and losses. It's definitely a high-stress, potentially high-reward approach, but it's not suited for the faint of heart or, those with limited time. Then, moving on, there's the long-term hodler. This philosophy, which famously came from a community typo, right? It's all about conviction and fortitude. You acquire assets and you just hold them for years, often through multiple market cycles, those exhilarating bull runs and the brutal bear markets. Your focus is unwavering, fixed on the underlying project's fundamental value and its sort of big picture growth potential.
So, tuning out the daily noise.
Exactly. They consciously disregard daily, weekly, even monthly volatility. They trust in the transformative potential of the technology or maybe the network effects of their chosen assets. Now, this style, it demands immense psychological resilience, unparalleled patience, and a deep, almost philosophical belief in the future of these decentralized systems, because you will undoubtedly face periods of significant, sustained drawdowns that test your resolve to its absolute limits. Moving to perhaps a more approachable style, we have the passive investor. This approach often leverages a strategy known as dollar cost averaging, or DCA. Instead of trying to perfectly time the market, which, let's be honest, even seasoned professionals struggle with consistently, you commit to investing a small, fixed amount of money at regular intervals, say weekly or monthly, regardless of the asset's current price.
Takes the emotion out of it somewhat.
Precisely. The profound benefit of this strategy is its ability to significantly reduce that market timing risk. Over time, your purchase price averages out. You automatically buy more units when prices are low and fewer when prices are high. It's a consistent, comparatively low-stress way to engage, perfectly suited for those who want to participate in the crypto space's growth without the constant vigilance or the emotional burden required of a hands-on trader. It really prioritizes consistency over trying to achieve perfection. And finally, there's a category we call the user. This perspective represents a pretty fundamental shift away from just pure financial speculation. A user's primary focus is on actually spending crypto and actively engaging with this burgeoning landscape of blockchain services, rather than solely investing for monetary gain.
So, using the tech itself.
It's exactly. This could involve using stablecoins for, say, borderless transactions, participating in DeFi protocols to earn yield or take out loans, collecting NFTs as digital art or gaming assets, or maybe participating in play-to-earn blockchain gaming. For a user, the utility, the functionality, the immersive experiences offered by this decentralized web are paramount. It highlights the ecosystem's potential far beyond just being a speculative asset class. It's really about building and interacting, not just buying and selling. Now, a really crucial insight from our sources, one that's often overlooked when people rigidly pursue just one single strategy, is that, quote, you can mix styles, just know what you're doing and why. Now, this isn't an invitation to just haphazardly combine approaches, right? It's really an emphasis on intentionality.
Meaning you need a clear reason for mixing them.
Precisely. You might, for instance, be a long-term hodler for the vast majority of your portfolio, say 80%. But maybe you allocate a smaller, clearly defined portion, perhaps 10%, for more active trading opportunities. And maybe another 10% for experimenting with new dApps or blockchain games, just to be a user in that part. The key here is explicit clarity and deliberate allocation. Without this precise understanding of your mixed strategy, you risk confusion, overextension, and, most dangerously, reacting impulsively when different parts of your combined approach might suggest conflicting actions. Mixing styles without a clear rationale. That can easily lead to a scattered approach that undermines your overall goals and exposes you to unnecessary risk.
That makes perfect sense. Right, so once you have that deeply personal plan firmly articulated, understood, the next logical step is getting the right tools to actually execute it. You wouldn't try to build a house without the right equipment, would you? And similarly, you probably shouldn't navigate the crypto landscape without the right digital arsenal. So let's now dive into the three main categories of essential apps and platforms. We're talking wallets, exchanges, and tracking tools. Let's begin with wallets. These are, well, your indispensable digital tools for storing, sending, and receiving cryptocurrencies. It's important to understand, though, they don't actually hold your crypto directly like coins in a physical wallet. Instead, they securely manage your private and public keys. These are essentially the cryptographic access codes to your funds on the actual blockchain. Think of your wallet more like your personal keychain, granting you access to your digital assets. Our sources highlight several key examples, each serving pretty distinct purposes. First up, MetaMask. This is pretty much ubiquitous now. It's a browser extension that acts as your primary gateway for interacting with the decentralized web, especially those decentralized applications, or dApps. It integrates almost seamlessly with countless blockchain-based platforms, letting you sign transactions, manage tokens, and engage with the whole Web3 ecosystem directly from your browser. It's really the essential tool for anyone wanting to actively participate in DeFi or NFT markets.
A must-have for many users, yeah.
Definitely. Then there's Trust Wallet. This is a highly popular mobile software wallet. Its strength really lies in its user-friendliness and accessibility, makes it perfect for managing a wide array of cryptocurrencies directly from your smartphone. It offers convenience and supports a broad range of assets, appealing to users who prioritize on-the-go management. And critically, especially as the source says, for significant holdings, there's Ledger. This represents the gold standard in hardware wallets. The immense value here is that it stores your private keys completely offline in a dedicated secure element chip, totally isolated from your internet-connected computer or smartphone.
That offline part is key.
It's absolutely crucial. This physical disconnection from the internet provides an unparalleled layer of security. It makes it virtually immune to online hacking attempts, malware, phishing attacks, you name it. Even if your computer is completely compromised, riddled with viruses, the private keys held within that secure element of your hardware wallet, they remain protected. They're never exposed to the vulnerable online environment. For anyone with substantial crypto assets, a hardware wallet isn't just a recommendation. It's really a fundamental security imperative. It's like the ultimate vault for your digital wealth. Okay, next up. Exchanges. These are the digital marketplaces where you buy, sell, and trade cryptocurrencies. They act as intermediaries, connecting buyers and sellers. Our sources meticulously analyze a few prominent ones, each with its own specific strengths and, target user base. Coinbase is consistently highlighted for beginners, and that's mainly due to its exceptionally user-friendly interface and really streamlined onboarding process. It prioritizes simplicity, making that initial step into buying crypto as straightforward as possible, even for people completely new to the space. Now, its fees might be slightly higher than some competitors, but its ease of use and strong regulatory compliance often justify this for newcomers.
A good starting point for many.
For sure. Then there's Binance, noted for variety. It boasts an incredibly extensive selection of cryptocurrencies and trading pairs. That makes it a preferred choice for users seeking diverse investment opportunities or maybe access to lesser-known altcoins. It also offers a huge ecosystem of services, everything from staking to derivatives trading, really catering to more advanced users, and Kraken is emphasized for security. It's cultivated a really robust reputation for its stringent security measures, its proactive compliance efforts, and its institutional-grade trading infrastructure. So for users prioritizing maximum security and regulatory adherence, particularly those handling larger volumes, Kraken often stands out as a top contender. It's known for its transparency and commitment to protecting user assets.
Different platforms for different needs, really.
Exactly. Finally, in this tools section, we turn to tracking tools. These are crucial applications or websites designed to help you monitor prices, aggregate market data, and maybe most importantly, track your overall portfolio performance across different wallets and exchanges. Staying intimately aware of your investments is, well, it's a non-negotiable aspect of responsible crypto participation. CoinGecko is primarily recommended for prices. It offers real-time market data, historical charts, comprehensive metrics for countless cryptocurrencies, often the first stop for quick price checks and market overviews. CoinMarketCap is your comprehensive for data resource. It provides really in-depth cryptocurrency information, market cap, trading volume, circulating supply, detailed project descriptions. It acts like a veritable encyclopedia for anyone researching specific assets. And Blockfolio, though it's now part of the FTX app, the function remains relevant, is highlighted for portfolios, specifically designed for managing and tracking your individual holdings across different wallets and exchanges. It gives you that consolidated, real-time view of your overall crypto wealth, letting you see your net worth and track profit loss over time without manually logging into multiple platforms.
Super useful for staying organized.
Absolutely. And beyond these essential applications, it's vital to stay continually informed. Our sources briefly mention powerful, albeit maybe more informal, avenues like crypto Twitter, various Reddit communities dedicated to specific projects or general crypto discussions, and the official project blogs of the cryptocurrencies you hold. These are really dynamic ecosystems where news often breaks first, ideas get debated, and you can really feel the pulse of the market. They offer a direct line sometimes to developers, community leaders, early adopters, providing insights often unavailable through traditional media.
Which brings up a really critical point, doesn't it? How do you not just keep up, but actually thrive in a space that moves at, well, breakneck speed? A market that genuinely never sleeps. Continuous proactive learning isn't just important. I'd argue it's absolutely paramount. It's a lifelong endeavor in this domain. It demands an agile mindset and a real commitment to staying informed. You can't just set up your tools and expect to be fully prepared for everything that comes your way down the line. One of the most effective ways to stay both engaged and educated is to join communities. Platforms like Discord, Telegram, Reddit, they host incredibly vibrant and diverse crypto communities. These can be invaluable for gaining real-time insights, asking nuanced questions, finding peer support, participating in discussions with both seasoned enthusiasts and sometimes even core developers. However, and this is a critical caveat from our sources, while they offer a wealth of information, you must always exercise extreme caution.
Right. Not everything you read is gospel.
Exactly. Remember, these are public forums. Not everyone dispensing advice is an expert, and some people might have ulterior motives, ranging from promoting their own bags to outright scamming. Always verify, verify, verify. Cross-check information. Equally important, and this is a skill that just cannot be overemphasized in this landscape, is to read crypto news critically. The emphasis here isn't just on reading, but really on the critically part. The crypto media environment can be, frankly, a minefield of sensationalism, speculative rumors, and sometimes just outright misinformation. You must cultivate a discerning eye to separate reliable, well-researched sources from hype-driven narratives or, financially incentivized content. Look for multiple reputable sources to cross-reference facts. Try to understand the potential biases of the author or publication. And always question the narrative, especially if it sounds too good to be true or tries to instill a sense of urgency.
Healthy skepticism is key.
Absolutely essential. Now, for more structured and foundational learning, the sources strongly recommend that you take free courses. Platforms like Coursera, EDX, or even specific crypto exchange academies like, say, Binance Academy, offer excellent, sometimes university-grade, foundational resources. These courses can really deepen your understanding of core blockchain technology, cryptocurrency fundamentals, maybe advanced trading concepts, even the legal and regulatory landscape. They provide a more formal educational pathway, allowing you to build a robust mental model of the space, often without the significant financial barrier of paid programs. It's truly an investment in your knowledge that pays dividends later on. Lastly, while it's tempting sometimes to latch onto charismatic figures or popular personalities online, the advice is generally to follow trusted influencers, but always with a healthy dose of skepticism. Influencers can indeed provide valuable perspectives, highlight emerging trends, or even share a thought-provoking analysis. However, their opinions are not financial advice, right? And their motivations might not always perfectly align with yours. They might hold the asset they're talking about. Their knowledge, while sometimes extensive, isn't infallible, and they often have significant positions in the assets they discuss. So never blindly follow a recommendation. Always verify the information yourself. Conduct your own thorough research, your DYOR, and apply critical thinking before making any investment decisions based solely on someone else's endorsement. In a market this volatile, relying uncritically on external advice is, well, it's a recipe for potential disappointment and significant losses.
Okay, so you've meticulously crafted your plan. You've assembled your essential digital toolkit. You're committed to that continuous learning. Now, we arrive at what is arguably the single most crucial pillar of your entire crypto journey: security. And this isn't just a one-time setup thing. It's an active, evolving process, much like safeguarding any valuable asset in your life. As our sources so eloquently put it, and I think it really bears repeating, security is a marathon, not a sprint. Okay. To truly visualize and internalize this, maybe let's think about it like a hierarchical pyramid structure of security best practices, with the most robust and foundational measures right at the top. At the very pinnacle, the sort of unassailable top tier of personal crypto security, we find hardware security. This is highlighted as being absolutely paramount, especially, as we said, for significant holdings. We briefly touched upon it when discussing wallets, but its criticality really warrants a deeper dive. Hardware wallets, think Ledger or Trezor, are purpose-built physical devices. They're meticulously engineered to store your private keys completely offline. Why is this distinction so vital? Because by isolating your private keys, those unique cryptographic sequences that grant you irrefutable control over your funds from any internet-connected device, they become virtually immune to the vast majority of online threats.
That isolation is everything.
It really is. This includes malware infections on your computer, sophisticated phishing attacks, even compromised exchange servers. Even if your computer is completely riddled with viruses, the private keys held securely within that hardware wallet remain protected. They are never exposed to that vulnerable online environment. This makes it the single strongest defense against digital theft for your cryptocurrency assets. It's truly the ultimate vault. Okay, descending slightly from the apex of the pyramid, the next absolutely indispensable layer is private key management. This is, without any exaggeration, the most crucial practice you must master. Store backup phrases offline in secure locations. Your private keys are mathematically derived from what's called a seed phrase, typically a sequence of 12 or 24 seemingly random words. This phrase, it's the master key to all your funds associated with that wallet. Lose this phrase, your funds are gone, irretrievably lost.
And if someone else gets it?
Exactly. If someone else gains access to it, they can effortlessly regenerate your private keys and effectively steal your funds. They don't need your hardware wallet, they don't need your passwords, just the phrase. Therefore, storing it offline means meticulously writing it down, maybe on durable paper, engraving it on metal, or using a specialized seed phrase storage device, and then securing it physically in multiple highly protected environments. Think a fireproof safe, maybe a safety deposit box, or even distributing encrypted parts of it across trusted locations. Never, ever, under any circumstances, store your backup phrases digitally. Not in a text file on your computer, not in the cloud, not in an email, definitely not in a screenshot on your phone. These digital locations are just inherently vulnerable to online attacks.
Basic digital hygiene, but so often overlooked.
It really is. Which brings us down another tier, software hygiene. This might sound like simple, almost mundane advice, but its effectiveness is incredibly profound. The two core practices here are keep all apps updated and use strong passwords. Software updates, whether for your operating system, your browser, or your crypto-related applications, they aren't just about new features. Crucially, they often include vital security patches that fix newly discovered vulnerabilities, holes in the code that hackers could exploit. Running outdated software is basically like leaving your front door wide open, just inviting trouble.
And passwords.
And passwords, yeah. Weak, easily guessable, or reused passwords are an alarmingly common way people get breached. Always use unique, highly complex passwords, or even better, long passphrases for all your crypto-related accounts and services. Use a robust password manager to handle the complexity. And wherever possible, enable two-factor authentication, 2FA, preferably using a dedicated authenticator app like Google Authenticator or Authy, or even a hardware security key like a YubiKey. Avoid SMS-based 2FA if you can, as it can be vulnerable to SIM swapping attacks. The simple but critical step adds a powerful, often impenetrable layer of defense against unauthorized access. And finally, at the broad base of our security pyramid, forming that continuous foundation protection is vigilant monitoring. This focuses heavily on the human element of security. You absolutely must watch for phishing attempts and suspicious links with unwavering skepticism. Phishing scams are regrettably rampant in the crypto space. Malicious actors will go to extraordinary lengths to trick you into revealing your private keys, your seed phrases, or your login credentials. They do this by meticulously crafting fake websites, emails, social media messages, even direct messages that perfectly mimic legitimate services or trusted individuals. They can look incredibly convincing sometimes.
They really can. So always double-check URLs for subtle misspellings or extra characters. Scrutinize email sender addresses. Be extremely wary of unsolicited messages promising improbable returns, demanding immediate action, or threatening account closure. Your constant awareness, your discerning eye, your inherent skepticism, these are, in many ways, the very first and most crucial line of defense against these deceptive tactics. Never click on a link you don't fully trust, and always try to independently navigate to official websites rather than clicking through from an email or message. Yeah, it's quite remarkable when you consider how security isn't some static destination you just arrive at, right? And neither is your investment journey. The crypto market is inherently dynamic. It's constantly evolving new technologies, shifting regulations, emerging threats. So your strategy and your security practices absolutely must evolve in tandem. Which brings us to the critical importance of a regular strategy review. The why behind this kind of cyclical process is profound. Markets change, and so do your life goals. Simple as that. A strategy that was perfectly optimized for you 6 months ago might be suboptimal or even detrimental today. This can be due to significant shifts in market conditions, maybe new regulatory frameworks popping up, groundbreaking tech advancements, or perhaps most importantly, fundamental changes in your personal financial situation, your risk tolerance, or even just your life aspirations.
Life happens, right?
Exactly. Life happens. For this reason, the sources we looked at strongly recommend quarterly reviews as the ideal frequency. This provides a structured, periodic opportunity to assess, adapt, and refine your approach. Keep it relevant. Let's maybe break down the 4 key areas that should be meticulously addressed during each of these cyclical reviews. First, you need to check portfolio balance. Now, this isn't just about looking at your total dollar value. It's about ensuring that your current asset allocation, the proportion of different cryptos or asset classes in your portfolio, still aligns precisely with your original risk tolerance and investment goals. Maybe one asset has just experienced an explosive surge, making its proportion unexpectedly large and exposing you to concentrated risk you didn't intend.
Or maybe another has dropped significantly.
Right. Or another might have significantly dropped, altering your overall risk profile. This review is the perfect moment to consider rebalancing your portfolio, bringing those allocations back into alignment with your desired strategic blueprint. It's really a disciplined act of risk management. Second, you absolutely must reassess goals. Your life circumstances are never static, are they? You might land a new job, experience significant family changes, achieve a major financial milestone, or simply mature in your investment philosophy. All of this can lead to a shift in priorities. Your crypto objectives should evolve organically with you and your changing life. This quarterly review is the ideal time to revisit and update those initial goals, ensuring your crypto strategy continues to serve your broader life aspirations and financial roadmap. Maybe you now have a larger down payment target or an earlier retirement goal.
Keeps the strategy relevant to your actual life.
Precisely. Third, it's absolutely crucial to update security. This goes beyond just patching software, though that's important too. It's about a holistic review and strengthening of your entire protection posture. Have there been new, more robust security tools released since your last review? Maybe new best practices emerging within the industry, perhaps concerning multi-signature wallets for larger sums, or new ways to secure your seed phrase. Should you maybe upgrade your hardware wallet to a newer model with enhanced features? This regular check ensures your defenses are as robust and up-to-date as they can possibly be against the latest, most sophisticated threats. It's proactive defense against an ever-evolving adversary. And finally, a truly powerful and often underestimated step. Learn from experience. The sources appellingly advise you to document successes and mistakes for future reference. This is precisely where keeping a personal learning journal, which we'll touch on as a first step, becomes an invaluable asset. By rigorously reflecting on what went right and, perhaps more painfully but crucially, what went wrong, you gain profound insights that fuel continuous improvement.
Did you succumb to that powerful pull of FOMO and buy at the top? Did you maybe miss a significant opportunity because you were overly cautious? By analyzing your past decisions, your emotional reactions, the outcomes, you build a more refined, more disciplined, and ultimately more resilient approach for your future endeavors in this dynamic market. This cyclical review ensures that your crypto journey remains disciplined, adaptable, and above all, secure.
Wow, we've truly covered a significant expanse of ground here. From meticulously crafting that personal strategy to assembling the essential tools and erecting that ironclad security posture. But let's be absolutely honest for a moment. The world of crypto, despite all these insights, can still be bewildering, confusing, and yeah, at times genuinely stressful. It's a highly volatile, rapidly evolving landscape filled with both immense opportunity and, let's face it, significant risk. It is perfectly normal to feel overwhelmed at times, and it is absolutely vital to normalize seeking help when you do. If you ever feel overwhelmed, or if you encounter situations that are genuinely beyond your current understanding or maybe your comfort level, the first and perhaps most critical piece of advice is consult professionals. Specifically, our sources really underscore the importance of seeking out financial advisors familiar with crypto. Now, this is a crucial distinction, right? Because traditional financial advisors, while expert in their own field, may not possess the specialized knowledge required for digital assets, their unique risks, or how they integrate into a broader portfolio. Finding someone who genuinely understands this specific asset class can provide invaluable, tailored guidance. They can help you integrate your crypto holdings into your broader financial plan, advise on potential tax implications, and offer a professional, unbiased perspective, especially when emotional decisions might be tempting.
That specialized knowledge is key.
It really is. Beyond professional guidance, though, there's immense, often underestimated value in community support. Our sources suggest you reach out to trusted community members. As we discussed earlier, online communities, Discord, Telegram, various subreddits can be treasure troves of shared experiences, practical advice, real-time market sentiment. These are peers who are navigating similar challenges, and their collective knowledge can be a powerful resource for troubleshooting, understanding new trends, or sometimes just finding a sense of camaraderie. But, and this is profound, but always remember our earlier emphasis, apply rigorous critical thinking.
Don't take everything at face value.
Exactly. Never blindly follow advice, even from seemingly trusted community members. Verify information independently, cross-reference sources, and always conduct your own due diligence before acting on anything you hear or read there. And a warning that just cannot be overstated, echoing through countless cautionary tales in this space. Avoid risky, get-rich-quick schemes. The cryptocurrency landscape, unfortunately, attracts its disproportionate share of scammers, fraudulent projects, pyramid schemes, all promising unrealistic guaranteed returns. Remember this immutable truth. Legitimate investment takes time. It takes diligent research, patience, and often involves navigating periods of volatility. If something sounds too good to be true, like a guaranteed 10x return in a week, or an anonymous project offering absurd staking rewards, or an unsolicited message promising incredible wealth, it almost certainly is. Always be deeply skeptical, particularly of offers that pressure you to act immediately or demand large sums of money with very little transparency. Your skepticism is probably your greatest asset here.
Yeah, and this leads us naturally to reflect on some of the profound psychological pitfalls that are just inherent in the crypto market. Beyond the technical challenges and the security risks, the emotional roller coaster can be truly intense. It often leads even seasoned investors astray sometimes. This is precisely where FOMO, the fear of missing out, comes into play directly. And it's a powerful, almost primal psychological phenomenon that frequently leads to impulsive, ill-advised buying decisions.
Oh yeah, you see a coin pumping.
Exactly. You witness an asset experiencing these parabolic gains. Everyone on social media is buzzing with excitement. And you feel this intense, almost irresistible pressure to jump in. You fear you'll be left behind while everyone else reaps massive profits. Our sources deliver a really clear, incredibly calming mantra as a defense against this psychological trap. Remember, no one owes you profits. Stay patient and stick to your plan. Now, this isn't just about financial discipline. It's about cultivating profound emotional discipline. Prices can skyrocket just as quickly as they can plummet. Buying into a hype cycle purely due to FOMO often results in buying at the absolute market top, only to see prices correct sharply shortly thereafter. That leads to significant losses and deep regret. Sticking rigorously to your predefined goals, adhering steadfastly to your chosen investment style, and respecting your established risk tolerance that is your most potent defense against impulsive, emotion-driven decisions that can fundamentally undermine your long-term strategy. True patience, the kind that endures through both the euphoria and the despair, is genuinely a paramount virtue in this market.
What illuminating insights there. Okay, so you've absorbed this incredible wealth of information. You've hopefully begun that vital process of self-reflection on your own goals and risk tolerance, and you're now acutely aware of the essential tools and the robust security measures needed. Now, let's talk about your first concrete steps after finishing this deep dive. We want to equip you with practical, actionable advice that you can implement immediately to kickstart your confident journey into crypto. First, if you haven't yet taken the plunge, set up your first wallet. Based on your initial needs, your strategic approach, choose one that feels most appropriate for you. Perhaps it's MetaMask for exploring dApps on your desktop, engaging with the broader Web3 ecosystem, or maybe Trust Wallet for managing some initial holdings conveniently on your mobile device. The key here is simply to begin, to establish your digital presence in a way that feels right. Second, and this is a truly invaluable confidence builder, I think, practice sending a small amount of crypto. This doesn't need to be a significant sum at all. Maybe just a few dollars worth, or even a fraction of a dollar if the network fees allow it. The objective is simply to gain hands-on experience with the fundamental process. Sending funds from one address to another, understanding how to confirm transaction details, familiarizing yourself with network fees, gas fees, observing the confirmation process on the blockchain. This practical familiarity, even with a tiny amount, will significantly reduce anxiety and build crucial confidence for when you eventually handle larger, more meaningful sums. It really demystifies the mechanics.
Gets you comfortable with the process.
Exactly. Third, and this ties right back into our earlier discussion on lifelong learning, join a crypto community. Whether it's a specific subreddit dedicated to a project you find fascinating, a Discord server focused on a particular niche like DeFi or NFTs, or maybe a Telegram group for general market discussion. Immerse yourself in the conversation. This will allow you to stay actively engaged, constantly informed about new developments, and intimately connected to the ever-shifting pulse of the crypto world. Just again, remember the caution around critical thinking and verification. And finally, a practice that will profoundly supercharge your learning journey and your strategic refinement. Keep a journal of your trades and lessons learned. This directly links back to that learn from experience aspect of our strategy review cycle we talked about. Document why you made a particular investment or trade decision. What were your anticipated outcomes? And then rigorously reflect on the actual results. Did it go as planned? What unexpected challenges or surprises did you encounter? What key insights did you gain from both your successes and your mistakes? This personal, evolving record is an invaluable tool for continuous improvement. It helps you truly learn from your own experience, refine your decision-making framework, and hopefully avoid repeating past errors. #outro. So what does this all mean? Well, it means you now possess a comprehensive, actionable framework for confidently navigating the intricate and, yeah, often exhilarating crypto space. We've taken you on quite a journey, haven't we? From the very personal act of defining your goals and choosing an investment style that perfectly fits you. We've explored the essential tools, your wallets, exchanges, tracking apps, and really underscored that indispensable lifelong learning mindset needed to stay ahead in this dynamic environment. And critically, we've broken down that hierarchical pyramid of security, meticulously reminding you that safeguarding your digital assets is truly a marathon, not a sprint, culminating in the profound importance of those regular, proactive strategy reviews. So congratulations, you've taken a crucial, empowering step towards becoming a more confident, more responsible, and ultimately, hopefully, a more successful participant in the transformative world of digital assets.
And, we connect this to the bigger picture for just a moment. The diligent application of strategy, security, and continuous critical learning. It isn't just about skillfully navigating the crypto market. It's actually a powerful and universally applicable blueprint for managing any complex and dynamic domain in your life. Whether you're embarking on a new career path, cultivating a demanding new hobby, or even focusing on your personal well-being and intellectual growth, the same core principles really hold true. Clearly defining your goals, identifying and mastering the right tools, and committing to unwavering vigilance and iterative learning that's the bedrock for success and resilience, pretty much across the board.
A truly profound thought to leave you with there. Thank you so much for joining us and diving deep into this critical topic today. Keep exploring, keep learning, and stay exceptionally well informed out there.